Good morning, ladies and gentlemen of the press, and welcome to the 107th Mpc Press Briefing. We are grateful for the collaboration and the strategic role you play in the propagation of the bank's monetary policy decisions. This morning's press briefing follows the meetings of the Monetary Policy Committee last week, and this morning we'll be listening to the chairman and we'll give you the media an opportunity to ask questions at the end of his presentation. This press conference is live on the Bank of Ghana website, bog.gov.gh, on Facebook at the Bank of Ghana, and on the bank's YouTube, Bank of Ghana. We are grateful to some of the media houses who are streaming this press briefing live on their media portals. We are very, very grateful for the streaming so we can reach a wider audience. Thank you very much. It's time to listen to the chairman of the Monetary Policy Committee and Governor of the Bank of Ghana, Dr. Ernest Addison. We'll welcome the chairman to deliver his statements, and as always, we'll give you an opportunity as well to ask questions. I respectfully, with a round of applause, shall I invite the chairman of the MPC and Governor of the Bank of Ghana, Dr. Ernest Addison.
Thank you. Thank you very much, Samuel. Nana, it's good to see you as usual. It's always a presence here. And to thank the journalists who are present, even though we decided to do this a little earlier today. I see that the interest in the press conference is still very high. We'll try to be very quick today so we can all have time to listen to the BDA review in Parliament. So I hope that the moderator, Mr. Moderator, we have to manage the Q&A session so we don't spend too much time here. So good morning, ladies and gentlemen of the media, and welcome to the press briefing after the 107th Monetary Policy Committee meetings which took place last week. The committee deliberated on recent macroeconomic developments and assessed risks to the inflation and growth outlook. A summary of the assessment and key considerations that informed the committee's decision on the stance of monetary policy is provided below. Uncertainties in the global economy have heightened since the last MPC meeting in May 2022. Headline inflation in several advanced and emerging market economies has drifted above set targets amid escalating energy and food prices, as well as persistent and broadened supply chain bottlenecks. These trends have prompted swift and coordinated monetary policy responses by the major central banks. In advanced economies, the US Federal Open Market Committee, the Bank of England, and more recently the European Central Bank have raised interest rates and signaled more aggressive rate increases to anchor inflation expectations. In a similar direction, central banks in emerging market and developing economies have also moved to tighten their monetary policy stance in response to rising inflation and currency pressures. The global economy is now being threatened with historically high inflation and slowing growth, triggering recession concerns in many advanced economies. As a result, global growth forecast for 2022 has been downgraded, and the IMF projects the world economy to grow by 3.6%, as against the growth of 4.4% contained in its World Economic Outlook update of January 2022. Global financing conditions have tightened further, reflecting monetary policy normalization and expectations for further increases in policy rates, which has led to higher government bond yields, repricing of risky assets, and strengthening of the US dollar. The interplay of these tighter financing conditions and a strong US dollar have widened sovereign bond spreads and quickened capital flow reversals from most emerging and frontier economies. With dwindling reserve buffers, external vulnerabilities in several emerging market economies have heightened, resulting in increased depreciation across most currencies, higher debt service levels, and external financing constraints. At home, economic activity moderated in the first quarter. Latest estimates from the Ghana Statistical Service showed moderation in GDP growth to 3.3% for the first quarter of 2022, compared with 3.6% in the same period of 2021 and 7% in the fourth quarter of 2021. Non-oil GDP growth was 3.7%, down from 5.3% recorded for the same period in 2021. The deceleration in growth was driven by slower activity in the agriculture and service sectors. Beyond the first quarter, the Bank of Ghana's high-frequency indicators reflected further slowdown in economic activity consistent with the recent GDP data. The updated Composite Index of Economic Activity recorded an annual growth of 1.7% in May 2022 compared to 2.5% in April 2022 and 5% in December 2021. The key growth drivers were exports, credit to the private sector, and tourist arrivals, while construction activities and industrial production contracted over the period. The pace of expansion in monetary aggregates moderated in the first half of 2022. Broad money supply grew by 19.1% in June 2022 compared with 21.3% in the same period of last year. The slower growth was driven by a contraction in the net foreign assets of banks, which was partly offset by a significant expansion in the net domestic assets. Reserve money growth slowed to 33.8% from 41.2% recorded over the same period. Credit to the private sector is recovering to the pre-pandemic levels, reflecting commercial banks' portfolio rebalancing. In year-on-year terms, private sector credit increased significantly by 33.7% in June 2022, compared with 6.8% in the same period of 2021. In spite of the sustained price pressures, private sector credit in real terms recorded a 3% growth. A year ago, in June 2021, real private sector credit had contracted by 0.97%. The latest credit conditions survey of banks revealed tightened credit stance on loans to enterprises and households. Notwithstanding these tight credit conditions across the industry, banks' credit extension improved during the review period. New advances to the economy broadened across the industry, with 20 out of 23 banks extending new credit. Total new advances as of June 2022 was 24.6 billion Ghana cedis, compared to 15.9 billion recorded for the same period of 2021. Results from the bank's latest confidence surveys conducted in June showed significant softening of business and consumer sentiments. Whilst consumers felt less optimistic about future economic conditions, businesses were concerned about the impact of high cost of raw materials, rising labor costs, exchange rate volatility, and weak consumer demand. These conditions adversely impacted business optimism and prospects. At the same time, the Purchasing Managers Index, which provides information on inventory accumulation and new orders at the firm level, also declined. Assessment of the banking sector's performance for the first half of 2022 showed robust growth in assets and deposits. Total assets grew by 22.8% on a year-on-year basis to 200 billion at the end June 2022, compared to the growth of 17.2% in the previous year. Total deposits grew at a slower pace by 19.1% to 131.3 billion Ghana cedis, relative to 22.5% growth a year earlier. Key financial soundness indicators of the banking industry remained positive. The capital adequacy ratio was 19.4% in June 2022, well above the regulatory minimum of 13%. Core liquid assets to short-term liabilities improved to 30.2% compared with 27.5% in the previous year. The non-performing loans ratio also improved to 14.1% at the end of June compared with 17%, reflecting some moderation in the growth of the stock of non-performing loans, as well as the rebound in credit growth. The banking sector's profit before tax was 4.4 billion Ghana cedis, representing 21.6% annual growth in June 2022, compared to 32.1% in the previous year. Net interest income grew at 12.4%, compared with 19.4% a year ago. Net fees and commissions, however, grew by 29.2% compared to 19.6% in the previous year, reflecting a rebound in trade finance-related business. These developments culminated in a 23% growth in operating income, compared with a growth of 15.7% in the corresponding year. Operating expenses also recorded a higher growth of 22.9% compared to 7.3% in the previous year, moderating the growth in profit before tax during the first half of 2022. The two inflation readings since the May Mpc meeting pointed to continued broad-based upward pressure on prices, reflecting the pass-through effects of increases in ex-pump petroleum prices, transportation costs, currency depreciation, and food prices. Headline inflation increased markedly from 23.6% in April 2022 to 27.6% in May, and then further up to 29.8% in June. Food inflation went up from 26.6% in April to 30.1% in May, and then 30.7% in June 2022. On the other hand, non-food inflation moved from 21.3% to 25.7%, and then to 29.1% in June 2022. Similar to the observed trends in headline inflation, underlying inflation pressures have also risen. The bank's core inflation measure, defined to exclude energy and utility, rose from 22.3% in April 2022 to 26.4% in May, and then to 28.4% in June. In addition, weighted inflation expectations from businesses, banks, and consumers remained elevated in June 2022. The pace of month-of-month inflation has, however, slowed for the second consecutive time. After increasing by 5.1% in April 2022, the monthly headline inflation slowed to 4.1% in May, and then to 3% in June. Month-on-month food inflation also increased at a rate of 5.8% in April, 4% in May, and eased to 2.3% in June. Similarly, non-food monthly inflation also slowed from 4.6% in April to 4.1% in May, and further down to 3.6% in June 2022. Provisional data on budget execution for January to May 2022 indicated an overall broad fiscal deficit on cash basis of 5% of GDP against a program target of 3.5% of GDP. The corresponding primary balance for the period was a deficit of 1.4% of GDP against a deficit target of 0.2% of GDP. Over the period, total revenue and grants amounted to 29.5 billion Ghana cedis, below the projected 34.8 billion Ghana cedis. Total expenditure was 48.9 billion Ghana cedis, below the program target of 51.8 billion Ghana cedis. These developments impacted the stock of public debt, which increased to 78.3% of GDP at the end of June 2022, compared with 76.6% of GDP at the end of December 2021. Of the total debt stock, domestic debt was 190.1 billion Ghana cedis, while the external debt was 203.4 billion Ghana cedis. Interest rates generally trended upwards in tandem with the bank's policy stance. In the money market, the interbank weighted average rate increased to 19.9% in June 2022 from 12.6% in June 2021, consistent with the direction of the policy rate. The upturn in the interbank rate transmitted to the retail end of the market, with average lending rates of banks increasing to 24.27% in June from 20.04% in December. Similarly, rates on the shorter-dated government securities increased significantly between December 2021 and June 2022. The 91-day and 182 Treasury bill rates increased to 24.15% and 25.5% from 12.49% and 13.19%. The rate on the 364-day instrument also increased to 27.1% from 16.4%. International commodity prices exhibited increased volatility during the first half of the year as crude oil prices hit historical highs. Crude oil prices rose sharply due to the limited capacity of OPEC Plus to increase production, as well as supply constraints from geopolitical tensions. Brent crude rallied by 57% on a year-to-date basis to settle at $117.2 per barrel in June 2022. Gold prices rose by 2.6% to settle at $1,837.1 per fine ounce amid the global inflation concerns. The price of cocoa beans, on the other hand, lost 2.2% to settle at $2,428.38 per ton due to concerns about weakening demand. On the external payments front, the general favorable commodity prices impacted positively on the terms of trade. At the end of June 2022, the trade account recorded a surplus of $1.4 billion, representing a year-on-year growth of 62%. The improvement stemmed from higher export receipts from crude oil, gold, and non-traditional exports. Crude oil exports went up by 61% year-on-year to $42.8 billion. Non-traditional exports increased to $1.4 billion, up by 21.7%, and gold exports was $3 billion, higher by 13.1%. However, earnings from cocoa beans declined by 31%, mainly due to a 28% reduction in production volumes. In total, merchandise exports for the first half of 2022 reached $9 billion, compared with $7.6 billion for the same period in 2021. Total merchandise imports amounted to $7.6 billion, up by 11.9% on a year-on-year basis, and driven mainly by the oil import bill. Oil and gas imports increased by 87.8% to $2.3 billion, while non-oil imports dipped by 4.7% to $5.3 billion at the end of June 2022. Notwithstanding the significant improvement in the trade surplus, the current account deficit widened to $1.1 billion compared with $762 million recorded in the same period of 2021. The weakening in the current account was primarily due to higher net outflows from the income and services account in particular, repatriation of profits and dividends, which offset the gains in the trade account. Again, the capital and financial account recorded significant portfolio reversals and net outflows in other investment accounts, as well as lower foreign direct investments. The combined effect of the widened current account deficit and higher net outflows in the financial account resulted in an overall balance of payments deficit of $2.5 billion at the end of June 2022, compared with a surplus of $2.4 billion in the same period last year. Gross international reserves declined to $7.7 billion at the end of June 2022, equivalent to 3.4 months of import cover, compared with $9.7 billion, 4.3 months of imports at the end of December 2021. The decline in the reserve buffers, alongside unfavorable global financing conditions, exerted significant pressures on the foreign exchange market. On the interbank forex market, the Ghana cedi cumulatively depreciated against all the major currencies, 19.2% against the US dollar, 8.8% against the pound sterling, and 10% against the euro as of the 20th of July 2022. In the corresponding period of 2021, the cedi depreciated by 0.6 and 0.7% against the US dollar and the pound sterling, and appreciated by 3.3% against the euro. Summary and conclusions. Overall, the committee noted the significantly more challenging global context, as the global economy is expected to experience sharp deceleration. Amid higher commodity prices, supply disruptions, inflation has surged across most countries. Global financial conditions have tightened, and borrowing costs have increased, particularly for emerging market and developing economies. The slowdown in advanced economies is resulting in spillovers to the EMDEs, which have not fully recovered from the COVID pandemic, amplifying the effects of pre-existing headwinds to growth, including from higher inflation, tightened financial conditions, and weakened demand. Fiscal authorities in EMDEs, including Ghana, will be affected by the tighter financing conditions, higher borrowing costs, amid elevated debt levels. This will require reprioritization of existing spending programs to ensure fiscal and debt sustainability. The committee noted that akin to the slowdown in global growth, domestic growth is moderating as high inflation, supply bottlenecks, and exchange rate uncertainty act as a drag on economic activity. The softening of business and consumer confidence since the last quarter of 2021 and the measured CIEA growth are providing evidence of this slowdown. The committee noted the technical staff projections that GDP growth would likely slow down to within the 3.7% to 4.5% range from the projection of 5.8% for 2022. The banking sector continues to exhibit strong performance in the face of challenging headwinds from the macroeconomic environment. The financial sector indicators remain healthy, and with some improvement in asset quality reflected in lower NPL ratios compared with April 2022. However, the recent developments in the macro economy may pose some upside risks to the sector's outlook and will require strong risk management by industry and effective supervision. The execution of the budget has been challenging against the backdrop of macroeconomic developments. For the first 5 months of the year, available data shows a higher deficit relative to program, driven mainly by significant shortfalls in revenues relative to projections. The revenue underperformance reflected delayed implementation of several new revenue measures announced in the budget. On the expenditure side, higher interest payments led to some pressures, despite restraint on primary expenditures, on capital expenditures, which has declined markedly. Financing of the budget was entirely met from domestic sources during the first half of the year, as planned borrowing from international sources did not materialize. The outlook is for continued tightened borrowing conditions, and this underscores the need to reprioritize spending programs within the available financing envelopes. On July 1st, 2022, the government announced its intention to seek support from the International Monetary Fund. Initial talks have begun, and it is envisaged that a fund-supported program will help re-anchor expectations through implementation of reforms to restore creditworthiness and eventually lead to a regain of access to the international capital markets. The markets have already started internalizing the positive effects of the engagement with the IMF. The committee noted that inflation has persisted on an elevated path. A detailed review of the consumer basket shows that although initially driven by supply-side shocks, the initial relative price changes have broadened to almost all the items in the consumer basket. Over 80% of the items in the basket recorded inflation above 20%. Inflation perceptions and expectations, as revealed in the bank surveys of consumers and businesses, have increased and influenced agitations for cost of living allowances in the workplaces. The Bank of Ghana has responded decisively with its policy tools over the last few months, increasing the policy rate by a cumulative 550 basis points since November 2021 and tightened liquidity conditions. The committee also noted the deceleration in the rate of inflation in the last reading. The committee expects that the macroeconomic framework that will underpin an agreed IMF-supported program will present a strong, coordinated monetary and fiscal policy framework that will anchor stability and prevent a wage price spiral, which would lead to inflation becoming more entrenched. Based on the above assessments, the committee was of the view that it would be appropriate to pause and observe the impact of the recent monetary policy measures already taken. The committee therefore decided to maintain the monetary policy rate at 19%. Thank you.
Thank you very much, Mr. Chairman. It's question time. As always, let's be very brief with our preambles, and let's keep our questions very simple. We'll have just 2 rounds of questions. And respectfully, our questions shouldn't be more than 2. Respectfully. Toma, so first round, Toma, Mr. Atayabua, Elom, George Yafe, and Alberta. Toma, very brief. Thank you. As always, you mention your name and your media house.
Okay. Good morning, Governor. Toma Emery from Gold Street Business. In recent times, there have been widespread discussions that the nature of inflation, consumer price inflation in Ghana right now, is not something that can be properly curbed with monetary policy instruments, because it's basically price increases which are on a tangent from production costs and liquidity in the economy. The fact that the Bank of Ghana's Monetary Policy Committee has decided not to increase the policy rate despite still rising inflation, albeit at a slower rate, is that an admission that there's limited effect the monetary policy can have on inflation due to the nature of the inflation and the cause of inflation in Ghana right now?
Right. Toma, thank you. Mr. Obeda Elom, let's get ready.
My name is Obeda Tayebua from Business and Financial Times. So, Governor, my question is on the payment systems, considering the fact that we are told we are not getting the needed revenue, less than 10% of the e-levy target. And looking at the major disruptions it has caused in the market, especially with regards to mobile money, people are calling for scrap of the e-levy. Do you think that is prudent now, considering all the factors available? Secondly, looking at the treasury bills and how it's jumping and interest coming in there, halting the policy rates, don't you think it would also create disruption in the market and discourage investment in short-term bills, especially at a time government needs money to undertake its projects?
All right, thank you. Elom.
Good morning. My name is Elom from I Write for Economic Times newspaper. My question is, Mr. Governor, you said our reserve is 7.7 billion, which is 3.4 months import cover. I just want to know, let's look at this scenario in case the foreign investors decides to take away the dollar. What could be our net international reserves? Thank you.
Thank you too much, George Yafe.
My name is George Yafe from Joy FM. My question is, what is the plan on the monetary side to improve our reserve position? If government is not doing any borrowings, what is the plan? Because if you look at the net, some would say that it's a little bit challenging. So I want to find out from you, what's the plan on the Bank of Ghana's side to improve our reserve position? And also, can you also help us a little bit? You said that you were still trying to observe the market with respect to the policy rate. The previous decisions that you took, can you share with us how that has impacted the market? Because inflation is still going up. Thank you.
Okay, George, thank you. Alberta, last question for this round. Alberta.
Please, my
Very
name
brief.
is Alberta with Metro TV. The Vice President made us know that Bank of Ghana will be purchasing locally made gold, even though you have started. We want to find out how will it impact our reserves in the coming days. Also, I want to find out, the Court of Appeal has ordered that the Bank of Ghana will send a decision to revoke the license of UniCredit. What is your plan ahead of that? Thank you.
Alberta, thank you. Mr. Chairman, first questions for this round. We'll wait for a response. Thank you.
Well, thank you very much for those questions, starting with my friend Tuma, whether the decision to stay put is an admission of the limited effects of monetary policy On the contrary, I think that we went to a great deal of extent to demonstrate to you how the monthly inflation rates have behaved. And as we said in the presentation which I just made, we have seen a consistent decline in the monthly inflation rates. So we are convinced that the monetary policy actions that we have taken have had an effect, and we are seeing the rate of inflation, the pace at which inflation is going up, declining. That's very important. And therefore, we think that if we have not peaked, we probably should be peaking soon. This is what we make out of the data that we saw. Remember, I mean, the issues that you were saying that the consumer price inflation in Ghana cannot be resolved by monetary policy. We completely disagree with that. As I said earlier on, even though this was initially driven by supply shocks, we have seen this transmit into almost all items in the consumer basket. And once you're seeing this sort of generalized increases in prices, that immediately tells you that monetary policy has a role in trying to contain that type of inflation. So far from it, we are not admitting the limited effects of monetary policy. We think that our policies have been very effective, and we are seeing exactly what we expected to see, that the pace at which the rate of inflation was going would decline over time, and the data has borne that out. The second question on the payment systems, I think this was referring to the e-levy issue. I don't think that it is time to scrap the e-levy. I think that the discussions that I've been privy to has been on the level of exemptions granted under the e-levy law. So I know that there is some work which is currently ongoing to relook at those exemptions. And hopefully, when that work is completed, the levy would bring in more resources than it currently has done. On short-term interest rates, I believe that we have seen very sharp movements, probably more than 100% pass-through from the policy rate. If you look at the numbers on the 91-day and the 182-day instruments, they have really risen very sharply over the past few months. And I don't think that, the fact that we are pausing, the policy rate should affect the ability of the government to raise, funds from the short-term market. I believe that the rates there are already, relatively high compared to even what we have on the medium-term side. Elom on reserves and the impact of non-residents, if non-residents are to pull out of our market. The numbers for me do not suggest that that would necessarily negatively affect our current level of reserves. As you are all aware, there has been an attempt to get some more foreign exchange from the loan which has just been passed by Parliament, 750 million, which hopefully should be coming in. And in the last quarter of the year, we are also expecting the annual cocoa syndication, hopefully this time 1.5 billion. I mean, if those transactions are concluded, that should also help to shore up the reserves of the central bank. So the outlook for reserves, I believe, are quite stable at this point. We are not expecting a very sharp drop in reserves going forward. And then the question that followed that was on if the government is not borrowing, what are we doing on the monetary policy side to improve the reserve position? And then Alberta immediately after that asked the question about the impact of the gold purchasing on our reserves. So that's what the central bank is doing on trying to shore up reserves. I'm sure you heard the Vice President announce that the Bank of Ghana would have the first right of refusal to buy all gold that are produced within our economy. So that option is there. We've already purchased some under the domestic gold purchasing program. These would have to be refined. The initial purchases that were done were shipped overseas for LBMA certified refineries in order to get the gold to a standard that will be accepted by the international banks in order to count as part of our reserves. So this is really what we have done. I don't think I should be speaking on the court case because the matter is still pending, and we have appealed the decision by the appeal court.
And this is our last round. Nanaoye, Najable, TV3, and Nanekia, Emmanuel Bruce, and David Hatton. Thank you very much. So let's start with Nanaoye. Nanaoye, very, very brief, and let's be snappy. Thank you. Very brief.
Okay. Good morning. My name is Nanoye. I work with Asasi Radio. Mr. Governor, I have gathered that a mining company is attempting to sell dollars worth $110 million to banks, and they requested that some banks do the bidding, go through the bidding process. Indeed, one bank, a Pan-African bank, gave a rate of 8.467 per dollar and won the bid. I want to know what the regulation is concerning such transactions and the consequence effect that will have on the city. My second question has to do with Seed Funds Savings and Loans Company. Hundreds of traders have their funds locked up in that company. They have actually reported to your office at the City House. What is going on with seed funds, and how are you going to ensure that depositors get their money? Thank you.
Okay, now thank you, Najable.
Good morning, Mr. Governor. My name is Najable Ago with GBC. My first question has to do with how far the e-city pilot has gone and when it is expected to be rolled out fully. My second question has to do with cola and the expected increase in tariffs, utility tariffs come into play. What is the expectation with regards to the inflation rate? Is it going to, don't you think, it is going to keep increasing, or by next year, what is going to be the impact? Thank you.
Thank you. Nanekia, very brief.
Good morning, Nanekia Mensah Brampa with TV3. So mine is a follow-up to the gold purchase. On the purchase of gold as reserve, is the central bank buying directly from the mining companies or outsourced it with a broker? If there's a broker involved, want to find out under what arrangements we're looking at. And considering the fact that gold prices can plummet, what safety net has the bank put in place to reduce exposure to price volatility? Thank you.
Thank you. Thank you. Emmanuel Bruce.
I'm Emmanuel Bruce from Graphic. An appeal court recently upheld the BOG's application for the matter involving the revocation of the license of GN Bank to go through arbitration. I want to find out the status of that procedure. And also the BOG's SDI report. In the 2020 report, over 50% of the cases involved employees of the financial institutions. In the 2021 report too, the situation was same. I want to find out what the BOG is doing to kettle this stream.
Okay, thank you. Mr. David Hudson, please, very, very brief. Let's go straight to the question, please. Very brief. Then the last one will be with Mr. Cole of Bloomberg. Please go ahead.
Governor. Good morning. The BOG put up 700 ounces lately, and we, as the purchaser of gold once more, as you have said. Now the world price has gone up from 1,500 to 1,837. Now, as you have been given the first chance to buy the gold or purchase the gold, has the 700 ounces increased? Le Banque de Ghana a été choisi pour d'achat de l'or retrouvé au Ghana. Les 700 peuvent été offris l'autre fois. Est-ce que c'était augmenté? Have you increased? Since you have the right to purchase, has the 700 ounces?
What's the question? What's the fine details of what you want to know?
Since you've been given the right to purchase the gold, has the 700 ounces that you proposed the other time, have you have an increase in this? You offered 700 ounces of gold last session we had.
Okay,
Yeah,
right.
Thank you.
Thank you. Last question for today, Mr. Echo, Bloomberg.
Governor, good morning. My name is Echo from Bloomberg. The black market for dollar purchases and sales has come into focus since the BDCs reported that you are not able to meet their dollar demands for importation of crude and finished products. What plans do you have to curb this? And also, is there scope for any plan, as in like, is it sovereign backings or what have you, so that there may be sustained importation of crude with top dollar, given that you have limited reserves? Thank you.
Thank you very much. So that's the last question for today, Mr. Chairman. We're ready for your response. Thank you.
Okay, thank you very much for this second batch of questions from Nana Oye on the 110 million foreign exchange transaction which you referred to. First and foremost, mining companies do not have licenses to be trading in foreign exchange, right? So I don't think that mining company should have asked for bids from banks. That competitive bidding that the banks made to that mining company, requesting for the banks to quote in order to sell the foreign exchange, was wrong. And we already have our supervision people looking into that particular transaction. Most of these banks have, I'm sure you're aware, retention agreements. Some of them have 100% retention agreements, which means that they can keep the proceeds of all their gold exports outside the shores of Ghana. But they need CDs for their operational expenditures. So from time to time, they try to convert some of their foreign exchange into CDs. And we think that there is a better way of doing that rather than trying to carry out these unauthorized auction processes. So that matter is being looked at. There are many issues that have been flagged. I think even the size of the transaction would mean that there would be some single obligor breaches. And therefore, the central bank is looking at it. We probably have to use this opportunity to let the mining companies know that we are focusing very much on what is going on in that sector. We have met with them. I personally, with my management team, we have met with these mining firms. We have tried to use moral suasion to get them to repatriate as much foreign exchange as possible, and possibly to give Bank of Ghana the first right of refusal to buy the foreign exchange. We did not even hear about the availability of this 100 million. So maybe they were not interested because they thought Bank of Ghana might not give them a competitive rate. So it's an important matter that you have raised. We are looking at it very carefully, and hopefully we would rein them in, because they don't have licenses to be trading in foreign exchange and carrying out, competitive auctions on foreign exchange that they have to sell. The issue of seed funds, NDK, and a few others really disturbs all of us, because, we think that we have had a very successful financial sector reform, cleaning up the sectors. We've cleaned up the sectors of all the weak and insolvent institutions. And then we find out that there are a few more institutions that are also insolvent and weak. Unfortunately, at a time when the government's finances are under a lot of stress, this is essentially what the problem is. So how to get that additional 7 billion or 8 billion cedis from a budget which is already under a lot of strain to clean up these residual insolvent institutions has been the problem in the last year or so. And now that we have an opportunity to put everything on the table in terms of the negotiations with the IMF, I'm sure this issue would be one of them, and hopefully we would find the resources which would allow the central bank essentially to deal with that problem. So yes, it's unfortunate for the depositors that are caught up. It's not only seed funds, it's also NDK and a few others, savings and loans that have run into difficulties. On the ECD, there is a lot of progress that have been made. The last Mpc Press, we reported on it, on the pilot that was undertaken in Sefi area. So I have to go there and visit to know where this area is. And the feedback that we got was that the participants in the pilot were very keen. The initial sums that they were given to spend, the ECD units that they were given to spend, some of them used their own resources to acquire more, and therefore exhibited a very strong interest in the product. I understand the results are being studied now, and hopefully we'll be able to give you more information by the next NPC. Cost of living adjustment, whether expected increases in tariffs and all of that. I think sometimes we take stability for granted, and the recent developments in Ghana has really brought back the importance of stability. Sometimes we sound like a broken record every time the central bank speaks. We're speaking about macroeconomic stability, and Ghanaians, are we going to eat macroeconomic stability? I'm sure some of you have heard that before. Are we going to eat macroeconomic stability? But now you're getting a real demonstration of what it means when you don't have a stable macro environment. And, very high inflation at 30%, the purchasing power of your currency is gone. And that's why you're having the cost of living adjustment, because people go to the market with the same amount of money and they are not able to buy the same things that they were previously able to buy. This really is the cost of instability, and why stability is very important. So, yes, I think that it was needed to cushion workers a little bit from the erosion of the purchasing power of the salaries. But it would have to be managed going forward, because you cannot also have a situation where you have a deficit which is widening, and then wage adjustments which are making the deficit situation even more complicated and creating further instability, right? Then you get a vicious cycle of wage price adjustments which lead to more instability, and the workers And that cycle has to be broken by, fitting these sort of wage adjustments within an envelope which would make the fiscal still sustainable. I think this is the challenge from that side. Then the next question was on whether we are buying the gold directly. The plan was to buy some of it directly from the mining firms. I'm sure the Newmont announcement was made, so we are buying directly from Newmont. And then we are also working with PMMC to buy some of the gold. And the issue you raised about instability in gold prices, in the short term, yes, but in the long term, gold prices have always been a source of, stability. And if you look at the Bank of Ghana's holdings of gold reserves, we've had them for a very long time. You're looking at the, longer term stability properties of having gold. We are not holding them with a view to make a gain through short-term trading. And I believe that, as the gold reserves grows, right, maybe we would review that policy of actively managing the levels of gold that we have. But for now, the levels that we have been held for a very long time, and we have not really focused on whether we are making a capital gain or loss out of those reserves. I'm not sure about the question on GN Bank. Maybe if you can repeat it.
Yeah, the question was that an appeals court recently upheld the BOG's application that the matter be referred to arbitration. So I'm asking what's the process of that arbitration process now?
Well, I'm sure the lawyers here will probably be able to explain it better. From what I hear, the arbitration center has not even been established. In any case, for us, the receiver is continuing with his work. Since the license was revoked, the receiver has been at work trying to realize assets from GN Bank's assets, because we've paid most of the depositors of GN Bank. And the receiver has had to go in and try to retrieve, those that are indebted to the bank in terms of some of the loans that have been given up, as well as, realize value from the assets of the bank. So the important thing is that the receiver has continued to, what's the word? Resolve that institution. The resolution process has continued. And then your question on this financial stability reports on banking sector and the fact that most of the fraud involved staff of the banks. This is the finding from the work that our stability department, financial stability department, carried out. And that's why it's important for the banks to check on the people that they hire, whether these people are fit and proper. We always have to do background checks on people that we hire, get criminal reports, check with the police. We, at the Bank of Ghana, go through these due diligence processes before we hire staff. And it's important that the banks are also, following the same rules of ensuring that people that they hire are fit and proper to work in a financial institution. Thank you.
Chairman, we are very grateful for your time. Ladies and gentlemen of the press, thank you for coming. God willing, we'll meet soon.